Hello my fellow investors and welcome back to another stock analysis video. Today guys, I would actually like to do an analysis on a company that needs absolutely no introduction, and that is the company Tesla. Now Tesla guys, the company that, well, if you guys don't know about this company, then you've probably been living under a rock for the past almost 3 years now. Very hyped company overall, reaching maximum heights, and well, something happened that I noticed recently. Actually, I noticed during my live stream. If you guys haven't checked that out, I covered the CPI that happened today. I noticed something at the live stream that was interesting about this company, so I would actually like to cover it in a stock analysis to see if whether or not at the current share price it is a buy. So with that said, let's get started with this analysis. Now let's come over here to their earnings summary. On Seeking Alpha, they did have earnings on October 19th, 2022. EPS normalized actual came in at $1.05, which was a beat by 5 cents. EPS GAAP actual came in at 95 cents, which was a beat by 6 cents. Revenue came in at $21.45 billion, which was a miss by $428.34 million. Now, I normally wouldn't cover earnings when they are this far away. However, guys, I know this kind of company, and I know I'm going to get a lot of hate as soon as you guys see those target share prices. So so that way I can cover all of my bases, here are the earnings. I'm not going to go through them in depth, but just looking at them right here, we can see that they have actually become pretty profitable in the past 2 years or so, which is very good to see. However, they have still missed when it comes to their revenue expectations in the past earnings or so. Does that mean that they are not profitable? Absolutely not. However, you need to understand that these earnings estimates, when it comes to analysts, does determine a lot of their share price and how it will move in the future. So now let's actually come over here and take a look at their calculator. Ticker symbol of TSLA, market cap of $505.24 billion, a PE of 49.6. So that's a massive PE with a current share price of $161.21. Now before we move further, let me just go back to their page, guys. Really cool car, right? This is an awesome looking car, absolutely wonderful. I mean, look at this. This is the Model 3. We also got, let's see, I don't know what this is, the Model Y. Really good looking cars overall, so they make a very good product. All right, now with that said, let's come over here to the share price as of 1 year ago. They are down, guys, 50.04%, and on the year to date, they're down almost 60%. 52-week range, this is between $156.91 to $402.67. So again, with a current share price of $160.63, we are definitely in that lower end of the 52-week low. In fact, this is now a 52-week low company. And the reason why I'm emphasizing this is because of what I said at the beginning of the video. And that is that, guys, Tesla was a company that was massively overhyped. I mean, it reached a peak in November 2021 of $410. Now, they did have a couple stock splits here and there, but this is all adjusted to that stock split. So $410, guys, and as of today, they're up to about $160 or so. So to all of those people who said in my previous Tesla stock analysis, who said Tesla will never fall beyond this certain point, you're insane, it will never happen. Congratulations, guys, we're actually at the 52-week lows when it comes to Tesla. So this is just a perfect example as to how companies actually fall down to their fundamentals, which is why I actually mentioned those earnings report in the beginning of the video, because they did miss on their revenue. Does that mean that they weren't profitable? No, they probably beat on their revenue year over year. That's great. But because their valuation was so high in comparison to what they actually did, they essentially just crashed for it. Now, let's actually go on further into looking at their fundamentals. So coming into, guys, the net income, we got 5 years ago of negative $1.962 billion to 1 year ago of $5.5 billion. Now, remember, this company just turned profitable as of 2 years ago when it comes to their net income. So yeah, this is very interesting. The fact of the matter is that they have been consistently increasing at a pretty decent amount, with a massive spike from 2 to 1 year ago, and on the 5 year, this is an increase of 381%. Now, my issue is this massive jump right here. Now, obviously, we do have a lot of supply shortages and all of that stuff. However, this is not necessarily sustainable in my personal opinion. Therefore, I have to put this value at around a 35%, maybe even a 40%. I'm gonna go with a 40% just because they might get close to this $5.5 billion in the next year. However, it's still a massive jump. If this was at around like the $1 billion mark, then I would give it a much higher grade. But again, that massive outlier isn't something that I like. Coming now into the free cash flow. The free cash flow actually turned positive as of 3 years ago. However, 5 years ago, it was negative $4.14 billion to 1 year ago of almost $5 billion. That's an increase of 220% with an average of $860.8 million. Now, this is actually looking fairly good when it comes to this increase from 4 to 3 to 2 to 1 year ago. However, they did have a pretty big jump going from 5 to 4 years ago, going from negative $4.14 billion to negative $221 million. Now, seeing that was 5 years and 4 years ago respectively, I'm not going to hit it as hard. However, I am going to give it around like a 50%. Coming now into the revenue, this is actually looking fairly decent. However, we do see another massive spike from 2 to 1 year ago. 5 years ago, it was $11.76 billion. To 1 year ago of $53.8 billion, increase of 357.72%. As I said, the biggest jump here was 2 years ago to 1 year ago, going from $31.5 billion to, as I said, almost $54 billion. So I'm actually going to give this a pretty decent grade overall. It's not like the net income, right? It's not like this massive jump. So I'm actually going to give it at around like a 55% or so. It's fairly decent. Coming down to the total assets minus the total liabilities, this was actually looking fairly good. As of today, up to $41 billion in this difference. And within the past 5 years or so, they have been increasing, though we do see a massive jump from 3 to 2 years ago. Again, that might have just been COVID related and the fact that there's shortages. Therefore, the prices of their items are going to go up, right? The price of the cars are going to go up because of the shortage, giving it like this inflated kind of looking numbers. But nonetheless, they are still able to replicate it even up to today. So it's not looking too bad. Average total assets is $50.55 billion. Average liabilities is $28.4 billion. And doing this difference, we get $22.2 billion. I'm going to have to give this at around like a 50%, maybe even, yeah, I would say like around like a 50% or so, because it's just this pretty big jump right here from 3 to 2 years ago. But aside from that, it's not looking too bad. Cash flow minus the total liabilities, however, this one's looking pretty bad. Now, their lowest year was actually 1 year ago at negative $28.3 billion. Now, the reason why this is important is because if we take a look at the cash flow, they're the highest within the past 5 years. However, this is the lowest. So that just means that their liabilities are ramping up significantly. So that's pretty bad to see. However, we do see that from 5 to 4 years ago, they did go up a little bit, going from negative $27.6 billion to negative $26.42 billion. However, from 3 to 1 year ago, they have been decreasing, getting further and further into the negatives. So with that, it's really going to stamper my grade. Average cash flow minus the average liabilities, we get around negative $27.5 billion. I'm gonna have to give this like a 30% or so. And now for the shares outstanding, and this is by far what gives Tesla, well, its reputation, at least as an investment, because shares outstanding, it is the #1 silent killer when it comes to investing. People don't take a look at this. People just buy into companies because their stock price goes up, just like we saw with Tesla back in 2021. People were buying nonstop. Yet throughout this time, take a look at this. They were diluting you a significant amount. In fact, that is almost a 25% dilution on the 5-year, going from 2.5 billion shares to today of 3.2 billion shares. As I said, almost a 25% increase, to be exact, 24.72%. And even from the previous year to the current year, this is almost an increase of 2%, guys. That's absolutely massive. So this is major dilution. They have not shown any instance of slowing down. And, you know, seeing that they are a growth company, and I'm putting that in air quotes, they might continue to do this in the future as well. So for that reason, I have to give this a 0%. This is not looking good at all. And lastly, when it comes to the cash equivalents, this is looking fairly decent. They currently hold $19.5 billion in cash equivalents with an average of $11.64 billion. Now, coming into the total weighted grade, guys, we gave the net income of 40%, free cash flow 50%, revenue 55%, assets minus liabilities 50%, cash flow minus liabilities 30%, and the shares outstanding of 0% for an overall grade of 40%. So this is looking pretty lackluster. Now let me just come back over here and mention really cool cars. Their cars are looking very, very sleek, very, very nice. But the overall company, guys, at least as a stock, is getting 40% because let's face it, shares outstanding, dilution massively. They need to continue to increase this free cash flow. And honestly, my issue isn't really with the negatives. My issue is just with the massive outliers, especially in the net income and the revenue. And that is essentially what's giving me the total grade of 40%. Now let's make some assumptions of low, median, high using revenue growth, the predicted share buyback, and the required rate of return of 10%. Now, without putting any numbers, guys, we can see their valuation already. So let's come back over here and let's mention this one more time that I really like their cars. Their cars are pretty slick, you know, they're very, very, very nice. I think they go to like 0 to 60 in like a couple seconds or so. I don't know. I'm not really a car guy. That you're going to have to ask my friend for. But, you know, very, very cool cars. Now, that you have to separate from the company itself. And not putting in any numbers, guys, well, not adjusting for debt, this company's share price should be worth $3.93, and adjusting for debt, this is $14.05. Now, before anybody says this is wrong, this is incorrect, blah 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 blah, let me just remind you that discounted free cash flow isn't telling you what the share price is going to. This is telling you the intrinsic value of the company. I'm not saying that the share price is going to this. All this is saying is that the value of the company should be worth at around $4, not adjusting for debt, and adjusting for debt $14. That's all that is saying, right? And all of these numbers can change with these assumptions when it comes to the revenue and the predicted share buyback. So now let's come over here to the growth tab and see that the forward is estimated at 54.64% when it comes to Tesla. Now, what did we see when it came to analyst estimates when it came to the revenue? They missed a significant amount. Therefore, I'm going to be very, very conservative when it comes to this percentage that I'm going to put here for the revenue growth, because I honestly do think that analysts just blew their load when it came to this company. They were thinking that this was going to go to the moon, right? The whole to the moon, diamond hands, and all this crazy stuff. Just the hype of 2021 was insane, and even the latter end of 2020 as well caused this massive resurgence when it came to this kind of company. So I'm going to be very conservative, guys. I'm going to go with 8% for the low assumption. Let's go with 10% for the median and 12% for the highest assumption. Now for the predicted share buyback, we have been seeing that they have been issuing at 25% in the past 5 years. Will they slow this down into the future? Most likely not, right? So I don't think that they'll do 25%, but let's just go with at around like 14% for the low assumption. Let's go with 12% for the median, and let's go with 10% for the highest assumption. The negative just means that they're going to issue shares. Now with this, we get the target share prices. Now they are $4.53 all the way up to $5.38, not adjusting for debt. And then adjusting for debt, this actually comes up by a pretty decent amount, by around like $10 or so, like $10.50 or something like that. Now the target share price is not adjusting for debt. It is $14.45 to $16.36. Adding margin of safety of 5, 10, 15%. This puts me between $12.29 to $15.54. So with the current share price of $161.43, I can already hear the comment section. It will never fall down to this much. You're crazy. It will never happen. No, that can never happen. Okay, so let me just bring you guys back to the 1-year chart. They're down 50% on the year to date. They're down almost 60%. They went from $402, guys. Let me just put that into perspective. $402.67 to $156.91, and I believe they just touched this today. In fact, there's even this article right here. Tesla touches 52-week lows as investors decry Twitter distraction. Now, whatever. I guess they're saying that because Elon Musk is now in Twitter, this is the cause of this. I don't believe that. I really do not believe that at all. I think this happened because of, again, massive overvaluation when it came to this company. So to all of those of you guys who might say, no, this will never fall down to $15 or whatever, it has already fallen from 402 to now 160. I wonder what you guys were saying when it went from 402 to like 200, right? About half. What were you guys saying then? No, it'll never fall below 200? I mean, it already has. The fact that some people believe that this won't fall further, to me, is just insane. Now, as I said, guys, all of these numbers is based off of my assumptions. Obviously, you guys need to make your own assumptions, because if you really do believe that this company will do 54, let's just go with 60% in the next upcoming year. Let's just put this at 60% right over here. Then, you know, you guys get this amount of target share prices in accordance to whatever you assume, right? Because again, every investment is the present value of all future cash flow, and this is not financial advice. So please do your own due diligence when it comes to Tesla. I personally think it's overvalued. I think that a correct value to buy this is at around like, yeah, around like 20 bucks or so, believe it or not. I honestly do think it is worth at around like 20 bucks or so. So give me all the hate, whatever, I don't really care. The fact of the matter is that it has already fallen more than 50% on the 1 year and almost 60% on the year to date. That's all I'm going to say. So if you guys want this calculator and you guys want to make your own assumptions, please have it. It's available for free. I also have my book value calculator, my reevaluation calculator, and a dividend tracking sheet for everybody to have. Now, the best way that you guys can help me grow my channel and just grow in general is just like, subscribe, comment. It really does help. I really don't have any sponsorships. I don't plan on having any sponsorships unless it's like food related in the future. I mean, obviously, we know what just happened with the whole FTX fiasco. I don't want to deal with any of that stuff. If I end up getting a sponsorship, it'll be something tangible and something useful for all of you guys to have. So, you know, be that as it may, the best way that you guys can help me, guys, it is just help me grow my channel. Like, subscribe, comment. It really does help here with the algorithm on YouTube. So all in all, when it comes to Tesla, I'm going to say it one more time. Love their cars. They're really, really awesome. Really, really slick. The company and their products is really, really awesome. Elon Musk is amazing. I mean, he's the biggest troll ever, and I love that. Like, I really, like, when it comes to Elon Musk and his trolly ways, I absolutely adore it. The stock, though, guys, it is very, very overpriced. This is my opinion. Maybe if it were to fall more, then I would consider buying it, but as it currently stands, guys, this is just way too expensive. Anyways, that pretty much is it for this video. Like if you like, comment, subscribe. It really does help her with the algorithm on YouTube. You guys can follow me on my tech sites. Link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video.